Hey everyone, welcome back to Corporate Decoder. Today InnSuites Hospitality Trust IH just filed its quarterly report for the 30th of April 2026, and I am seeing a few interesting developments that hint at a potential turnaround strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is clearly shifting its focus beyond just hotels and exploring new avenues for growth, which could be a game changer. So let's dive into what InnSuites Hospitality Trust IH reported for the quarter ending the 30th of April 2026. It looks like they are indeed trying to breathe new life into their operations and even dabble in some pretty exciting diversification plans. The core of their business remains hotel ownership and management services, and the report shows that for the 3 months ended the 30th of April 2026, total revenue was about $2.19 million. This is a slight dip from $2.21 million in the same period last year, but the company points to significant property improvements as a reason for optimism. Looking at the balance sheet as of the 30th of April 2026, we see total assets were around $13.6 million, down from about $14 million at the start of the year. One notable item here is the employee retention credit receivable, which stands at a solid $1.2 million. This is essentially money they are due to receive, which helps bolster their current assets. On the flip side, total liabilities are quite high at over $14.5 million. Shareholders' equity is actually in negative territory, sitting at a deficit of about $921,000. This means that based on accounting rules, the company owes more than it owns, which is a bit concerning. However, the company is trying to improve the situation by repurchasing its own shares, which is shown as Treasury stock, currently valued at about $4,000. Now let's talk about how the company made and spent its money. For the 3 months ending the 30th of April 2026, they had a net income of about $74,000. That is a significant jump from just $39,000 in the same period last year. This improvement is largely driven by a favorable decrease in interest expenses, which went down by about $40,000. However, the net loss attributable to controlling interest was about $18,000. This means that after accounting for non-controlling interest, a portion of the company they don't fully own, the core business actually lost money for its main owners. This is a bit of a mixed bag, showing improvement overall, but still a loss for the primary stakeholders. The statement of shareholders' equity tells a story of some interesting moves. As of the 30th of April 2026, the total trust shareholders' equity is just under $3 million, but then you see non-controlling interest is a massive negative number, almost $3.9 million. This combination results in a negative total equity of over $900,000. Interestingly, they also repurchased Treasury stock during this quarter. This is when a company buys back its own shares from the market. They also issued shares for services rendered, which is a way to pay employees or contractors with stock instead of cash. Cash flow is super important for any business, and InnSuites Hospitality Trust IHT had negative cash flow from operating activities totaling about $41,000 for the 3 months, ended the 30th of April 2026. This means they spent more cash on operations than they brought in during that period. This is an improvement though compared to the same period last year when they used about $280,000 in cash for operations. Investing activities also use cash around $75,000 for things like property improvements. Financing activities use the most cash, totaling about $193,000, mainly for paying down debt. Overall, their cash balance at the end of the period was just over $41,000, which is quite low. Let's talk about the business itself. InnSuites Hospitality Trust IHT owns and operates 2 hotels, one in Tucson, Arizona, and another in Albuquerque, New Mexico. These hotels are branded as InnSuites and also operate under the Best Western name. But it is not just hotels, they are also involved with Unigen Power, Incorporated, a company developing clean energy generation. They hold convertible debentures and common stock in Unigen. IHT is taxed as a C corporation, a standard corporate tax structure. They are also pursuing opportunities in diversified development of innovative clean energy generation and have a significant investment in Unigen. The company's direct ownership in the Albuquerque hotel is about 21.90%, and they have an indirect ownership of about 51.69% in the Tucson hotel. The trust is the sole general partner of RRF Limited Liability Limited Partnership, a management subsidiary. The partnership agreement is quite detailed, outlining 2 classes of limited partnership units, Class A and Class B. James Worth, the chairman and CEO of IHT, and his affiliates own a significant chunk of these Class B units, representing about 19.19% of the partnership. If all these units were converted, they could lead to a substantial number of InnSuites Hospitality Trust shares of beneficial interest entering the market. The trust itself holds a large percentage of general partner units in this partnership. Liquidity is a major point of discussion. Their main cash sources are hotel revenues and management fees. The company acknowledges having about $41,000 in cash as of the 30th of April 2026. But they also have access to a $2.5 million line of credit with an affiliate lender and a $250,000 revolving credit line with Pima Federal Credit Union. Management believes they have enough cash to meet financial obligations for the next 12 months. They are exploring strategic options like selling or refinancing hotels, or even pursuing a reverse merger. This implies they are actively looking for ways to improve their financial standing and explore new opportunities. When preparing financial statements, companies have to make estimates and assumptions. For IHT, these include the useful lives of their assets and how recoverable those assets are. They use the straight line method for depreciation over estimated lives up to 40 years for buildings and improvements and 3 to 10 years for furniture equipment. The company mentions that for tax purposes they use accelerated depreciation, which means their hotel properties are likely carried on their books at values much lower than their current market worth. This is a common practice and can make a company look less valuable on paper than it might actually be in the real estate market. The hotel properties are a significant asset. As of the 30th of April 2026, the net book value of hotel properties was about $6.6 million. This includes land buildings, improvements, furniture fixtures, and equipment. The accumulated depreciation is substantial, over $12.6 million, indicating the age of some of these assets. On the corporate side, their net property, plant, and equipment is quite small, just over $20,000. Debt is a major factor here. They have mortgage notes payable totaling about $8.47 million as of the 30th of April 2026. The Tucson Oracle property has a significant mortgage of around $7.6 million related to a loan consolidated in March 2022. The Albuquerque Hotel also has a substantial mortgage of about $1.1 million under a loan agreement from December 2019. A key aspect of InnSuites Hospitality Trust IHTS finances involves related party transactions. They have a demand revolving line of credit promissory note with Rare Earth Financial LLC, which is wholly owned by Mr. Worth and his family. As of the 30th of April 2026, the amount payable on this line of credit was about $2.5 million. This is a significant chunk of their liabilities. Interest on this advance was paused. This demonstrates a close financial relationship between the company and its leadership's family interests. Looking ahead, the company has scheduled minimum debt payments. In fiscal year 2027, they owe about $665,000 in total debt payments. By fiscal year 2028, this jumps significantly to nearly $2.8 million, primarily due to the related party note payable. This highlights a substantial debt obligation coming due in the near future. Holders of the trust shares of beneficial interest have voting rights and are entitled to dividends if declared. The company has a share repurchase program and they repurchased about 3,700 shares in this quarter. This suggests they believe their stock is undervalued and buying it back can be a good use of capital. Related party transactions are a recurring theme. Mr. Worth and his affiliates hold a substantial portion of the partnership's units and a large percentage of the trust shares of beneficial interest. The trust manages the hotels through its majority-owned subsidiary RF LLP. The management fees for the hotels are 5% of room revenue plus a monthly accounting fee. They also employ a family member of Mr. Worth for its support services. These relationships are common in closely held companies, but are important to track for transparency. InnSuites Hospitality Trust IHT has a note receivable from the sale of its technology subsidiary IBC Hotels LLC. This note is for about $1.9 million with an interest rate of 3.25%. This sale represents a move to divest non-core assets and focus on their main hotel operations and new ventures. The note is secured by the buyer's interest in IBC and all assets of IBC. A really interesting part is that RRF, which is an IHT subsidiary, is now managing IBC and has a 5-year option to buy IBC at cost. This could be another strategic move for the company to potentially profit from this revitalized business. The investment in Unigen Power Incorporated is a key part of their diversification strategy. IHT has invested about $1.4 million in Unigen, which is developing a clean energy innovation. This investment includes convertible bonds, stocks, and warrants. The company itself is in the early stages with about 61% of engineering complete for their prototypes. James Worth, the IHT president, and Mark Berg, the IHT executive vice president, were elected to Unigen's management team in February 2026. This shows a hands-on approach and a belief in Unigen's potential. The company states this is a high-risk, high-potential return investment. This is a classic example of a small company trying to hedge its bets by investing in emerging technologies, hoping for a big payoff. In the management's discussion section, they highlight their strategy. They are actively looking to sell one or both of their hotel properties within the next 36 months. The estimated market asking price for the Albuquerque Hotel is $9.5 million, and for the Tucson Oracle Hotel, it is $18.5 million. These prices are significantly higher than their current book values, which is common when companies want to sell assets. They are also actively seeking a reverse merger partner, someone wanting to go public and use IHT's listing on the NYSE American Exchange. This is a clear signal that they are trying to orchestrate a major strategic shift for the company. Interestingly, the company states they do not have any off-balance sheet financing arrangements. This means all their financial obligations are reflected on their balance sheet, which is good for transparency. This section is not required for smaller reporting companies, so there is no detailed information here. Management reports that their disclosure controls and procedures were fully effective as of the 30th of April 2026. They also believe their internal controls over financial reporting are effective based on criteria from COSOV. They have taken steps to enhance their accounting staff and internal controls, including hiring more technical accountants and formalizing processes. This shows a commitment to improving financial reporting and compliance. Scroll note, looking at these results more broadly, InnSuites Hospitality Trust IHT appears to be in a transitional phase. Their core hotel business is stable but facing challenges with debt. The real excitement seems to be in their diversification efforts with Unigen Power and the potential for a reverse merger. The company is trying to leverage its listing to bring in new opportunities and unlock value from its assets. The asking prices for the hotels are ambitious, and a successful reverse merger could fundamentally change the company's trajectory. My biggest concern is the negative shareholders' equity and the high debt load. While the diversification is promising, it is also high risk. What I am actually looking for is concrete progress on the Unigen investment and a successful reverse merger or sale of the hotels to alleviate the debt burden. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, Swine Text.